for NVIDIA just leading up to this report, and bulls would argue that the stock is trading at what, 37 times forward PE ratio, and you compare it to AMD at 44 times. ARM you wouldn't even compare because that's way higher, 70 times. But what's important for this company is how the stock reacts post earnings. 16% higher in one day, like last quarter that we saw. There was what, 24% the previous quarter. That's going to pull in more money into semis, or is it going to go lower, and that's really going to drive momentum out and maybe into software?
Christina, thank you. Christina Partsinevelos, appreciate that. It's hard to find people getting negative ahead of the print on the 22nd. Adam Parker, who's gotten, I think, incrementally more cautious / negative on mega cap tech, won't go there when it comes to NVIDIA. They're still bullish there. Jeffries says that pullback that we had, Joe, was the time to reload. They raised their target to 1,200. Too early to sift out the winners and losers in the AI basket yet, but NVIDIA is our favorite. I mean, some people would quibble with maybe it's not too early. I mean, the street has obviously placed its bet that it's not too early to say that NVIDIA is undoubtedly one of the winners. Doesn't have to be the undisputed winner, but it is no doubt thought of as, if there's, you know, a couple of winners, 2, 3, they're in that mix, no matter what.
Yes, and I agree completely on what Adam is saying about NVIDIA. It's the anchor of the AI halo, and I doubt very much that even if NVIDIA was to deliver an earnings report, which would be disappointing, and we'd see the price decline, I don't think very many people would move so quickly away from NVIDIA. So, as I said, it seems to be the core anchor AI holding. What's interesting to me is what the effect is going to be of NVIDIA's earnings on the rest of the AI halo. Because if I take 3 names.
How about like critical?
So if I take 3 names, if I take Broadcom, I take Cadence Design, which I talk about a lot, and I take AMD, each of those stocks had their peak in March. Those stocks have done nothing over the last 60 days. They need something to resurrect performance, and it's really, they're reliant on getting something positive from NVIDIA to do that. So I really think the AI halo is where you want to focus on off this upcoming report.
I've thought, I have a thought process in regards to where NVIDIA stock price is going short term. I thought it could hit 1,000 plus before earnings. We'll see if it happens. I wouldn't count it out. I mean, I know it looks pretty far away considering NVIDIA earnings are next week, and it's 906 right now. To sort of climb to 1,000 plus is a big percentage move there, right? But I don't know. I've kind of always thought like it would be 1,000 plus, and then if they come out and knock numbers out of the ballpark again, then 1,200 after earnings. But we'll see. We'll see where things shake out there. There's no reason for me to believe guidance is going to be bad or something like that, because we know they got the new Blackwell chip coming out back half the year. We know demand's going to be insane for that. We know spend continues. I mean, every big tech company is trying to get their hands on as many NVIDIA chips this year as possible, right? Which is really going to push into next year and following years as well. So this, I just think it's a very tough stock to bet against. It really is brutal, especially considering the valuation is not crazy on it. It's at 4P under 40. With those sorts of growth rates and that sort of positioning in the market, center of the universe, that's a hard one to say it's overvalued. Next one up here, one of the most powerful themes this quarter is energy transition super cycle. By the way, also in universal NVIDIA, right? Wait to see that software revenue over these coming, next 2 to 3 years.
There was no warning.
That's going to get a lot of people very excited.
One day everything
Retail
worked, and the
earnings
next
will
day
take center stage this week. Stephanie Link joins us now. She's Chief Investment Strategist, Portfolio Manager at Hightower Advisors, and a CNBC contributor. We're not done with earnings.
Oh, no,
obviously, no. Stephanie, we got Home Depot tomorrow, a couple other, I guess Walmart, so retailers and the like. But there is an interesting piece, lead story in the Journal, a little bit different than.
So tomorrow, Home Depot, Alibaba. Wednesday, Cisco. Then Thursday, Walmart is up. Interesting.
I think your take. You liked the overall results. Thought that things looked like they were up about 10%. The Journal.
There's 3 other companies that still have to report this earnings season that I'm looking really forward to. Obviously, NVIDIA's one. Second would be RH. Third, Nike.
Point out though, if you disappointed, you really got hurt. And even if you exceeded expectations, you didn't get quite the bang for your buck you've gotten in previous quarters. To me, that sounds like multiples with perhaps no interest rate cuts, multiples are going to have a hard time expanding further from where they are. If you beat expectations, you get a little bit of a bounce. But if you don't, then your stock goes down with the lower earnings and with the multiple staying where it is or going down.
Yeah, but I think if you don't have multiple expansion, but you still have earnings going higher, that actually will be, that'll be enough, Joe, I think. And I always call earnings season silly season. You know that because you have these absurd reactions. Even if you miss, some stocks being down 10, 15, 20%, it gives you an opportunity for sure if you have conviction, obviously, in the idea. And if it doesn't go up that much, but they actually do beat, that also is an opportunity. Stocks follow profits on the way up and on the way down. So the names and the sectors that are seeing earnings revisions higher, obviously the stock should go higher over time.
Home Depot has been uncharacteristically, at least as far as the results, it hasn't been the stalwart that it's usually been in recent years. The stock, though, for a while had a really sharp comeback, even though the fundamentals didn't improve that much. I don't know what's happening now with the stock. Maybe it's inflationary expectations reemerged right about where that stock peaked, I think, and inflation doesn't help Home Depot usually.
Well, higher lumber prices will help, actually, Joe, for this quarter. Lumber prices are up about 13%. Home Depot, if you step back, they actually were a huge beneficiary during COVID. We were buying everything for our homes because that's where we were living, right, 24/7. So they benefited in COVID. And then you had that that post-COVID hangover, unfortunately, and you have had 5 negative quarters of same-store sales. I think you're coming to an end of the negative comps. I think you have easy comparisons. As I mentioned, you have a little bit higher commodity prices. They are focusing more on Pro. They just made that acquisition, SRS, and now Pro is going to be 50% of their total revenues as opposed to Lowe's, which is 25%. I think Pro is going to hold up better than do it yourself, and that's why I think the stock is poised to do better. But obviously, higher interest rates is the concern, and overall concerns about housing. I'm a bull on housing because I think we are 5 million homes short in this country, and if you talk to any of the home builders, they have underproduced for 14 straight years. It's cheaper for them to buy back their stock than to actually buy land. So to me, I think housing over the long haul is going to be very favorable. Maybe this year you have some ups and downs and some volatility, but I like the way to play it through Home Depot.
Such a flawed way of thinking. In regards to this home builders, right? Of course, all home builders are going to say we're underbuilt, we need to build more. Every CEO in the world feels like their company's products are underserved and they're underbuilt.
On the radio.
They need to build more.
We got people
are going to have to be catch up here.
Do now. Tell them to hold this position while
if you talk to him one-on-one. People haven't been upgrading their iPhones as much, and a big super cycle's coming, right? I'm sure Elon would say the same thing about Tesla. I'm sure Amazon feels the same way about AWS and all their businesses if you were to talk to them, right? Every CEO is going to feel like, the market hasn't been buying enough of our product and service, but they're going to do that in the future, right? That's the name of the game. So I don't take any weight in what home builders say about their opinions on this and that.
I mean, comps aren't going to be. There's going to be another down quarter, right? This isn't where you think things are finally bottoming, but it's not going to be in this quarter where you see year-over-year gains, are you?
I don't think you're going to see that great of results, but I think it's not going to be negative. And if we look at Scott's Miracle-Gro, they reported, and the read-through there is they had record shipments to their retail partners. Home Depot is a 29% customer. So to me, I think this is also a seasonally strong time for the home improvement companies and the housing stocks, too. I mean, look at D.R. Horton. They had 55% order growth sequentially in their quarter. So I think, you're going to have puts and takes. It may not be a terrific quarter, but I think you're on your way to a nice recovery.
Maybe flat same-store sales or slightly higher, you think?
Yeah, kind of. I think flat to slightly higher, but I don't think negative. And I think after 5 straight quarters of negative comps, this will show a little bit of improvement, and then it should improve as we go through. Again, they have very easy comparisons throughout the year, so I think we should see a better setup.
I mean, normally
It's done nothing, by the way, Joe.
But that's what?
You know?
Yeah, we had the chart.
Yeah.
But
I mean, it's up 19% the past year. I wouldn't say it's done nothing.
the housing, I mean, it's tough right now, the supply and everything else. And this is a housing, it's kind of a proxy, but there are times it does better if people can't buy new houses. Like, you can always make an excuse for why Home Depot is doing well or not doing well. Because it's people are moving and they're improving. And if housing is strong, then they're doing well for the professional builders. So we'll see what happens with that. You like some other ones? You like energy still?
Yeah, I do. I mean, I think one of the most powerful themes that I heard throughout the quarter that's starting to come to fruition is this energy transition kind of super cycle. And we've been talking about this for a really long time. We're going to spend about $4 trillion on anything that's tied to green, clean power, grid, data center, of course also AI. And this past quarter, we actually started to see it. You guys were talking about utility stocks last week and how well they have done. Well, that's because earnings for utilities were up 30%. CapEx is actually going higher because of all of these initiatives. And then if you look at companies like Eaton, they had earnings up 27%, Quanta Services up 17%, GE Vernova, they had revenues up 24%. Their book-to-bill in electrification was 2.2 times. So we're starting to see all of this come together, and that's why I think it is really a powerful theme. I own all three of those names, and I would be buying any of them on weakness.
So you had the jobs number, which started to, I mean, we were at the 10-year was sharply higher, so started moving on that. Then you had the claims number, big surprise, higher. So there's, that helped the markets, that helped yields. We're starting to think you're seeing a slowdown, and then you come back with focusing on the Atlanta Fed at 4.2% growth. Now you're telling me there's no slowdown in sight whatsoever. So which is it?
I don't know. I mean, it's not. I don't think we're going to grow GDP at 4.2% like the Atlanta Fed tracker is at now. But I do think that we're growing above trend. Is that 2.5%? Is it 2.5%, 3%? But the whole point being is we are running above trend. All of this fiscal and monetary policy stimulus that we put in place from COVID until now is actually doing its job. And I think that the better growth is the reason why we're seeing that last piece of inflation really challenged to come down. Right, we're going to get the core CPI this week. And it's going to be about 3.6%. Give or take a tenth or two or whatever the number is. We have made progress from 9.1% to this 3 kind of area, but we're not going to get to 2 if we're growing above trend. And so, to me, I'll take faster growth and a little bit higher inflation any day from an investment point of view, because that means earnings can actually continue to go higher.
Found. Sending them to the evac.
Okay, so good point from her there, right? That's a good point. That's a good point in regards to inflation running a little higher, growth running a little higher. Sure, you would want that, right? But the problem is, if inflation is too high, then you also have issues, right? So, I mean, ideally, my opinion is, 2.5% GDP growth, 2.5%, CPI growth. I think that's kind of perfect, like magical number, in my personal opinion, on how the whole ship runs. It runs really smooth. But when you're talking about a CPI 3.5, now you're setting up the consumer to get hit too hard by inflation, right? There should always be inflation in the economy, but that level of inflation, there's limits. It's a fine balance. It's a very fine balance, right? Japan, they've been through, decades of little to no inflation, and it's not ideal. Some people might look at that, but you kind of get into lost decades when that happens. And so inflation's good to have some in the system, but too much, and it leads you to likely a big crash at the end of the cycle. Right? Alrighty, next one up here, talking about inflation. Okay.
Seem to be enjoying a Goldilocks macro environment, and that a soft landing for the economy is at hand. For more on the markets, the economy, and much more, we want to bring in Roger Altman. He's the founder and senior chairman of Evercore. And Roger, we're very near all-time highs. Do you think the market deserves these valuations?
I do, because We're seeing evidence of the economy starting to slow. You see the first quarter growth was down a bit. Job growth was down a bit. Quits, vacancies a little weaker. Average hourly earnings growth a little weaker.
I hate this. I don't like it when we try to spin growth slowing down as a positive thing. I understand we're trying to slow the growth down because of inflation, but at the same time, I don't think it's necessarily a great thing. It's an uncomfortable feeling when things are deteriorating in the economy, which slowing growth, it's not cool itself. It's just a nice way of saying the economy is deteriorating. That's all it is. It's a nice way of saying the economy is starting to deteriorate. And it's not as comfortable on feeling like you're investing into an economy that's deteriorating versus, let's say, an economy that's getting better and improving, right? And so that's one thing I push back on with a lot of these folks. They talk about it like, oh, it's so good. And I'm like, not great.
And that should pave the way for downticks on inflation and then allow the Fed a little later to finally turn to ease. I personally think there'll be a rate cut in September. I don't know if there'll be more than that this year, but I think the markets are responding to the positive, to the positivity of this slowing, the prospects for lower inflation, the prospects for monetary ease, and that's why both equities and the fixed income markets have rallied strongly.
I think the big question is how long that process takes for inflation to come down. Right. We're going to get other hints this week or other readings with PPI and CPI both out.
You did this?
If those numbers turn out to be hotter than expected, would you take your idea of a rate cut in September off the table?
Probably, because the Fed has to see proof that inflation is improving. And, we have a CPI number this week. Market expects, I think, 3.6% annualized rate, a little better than the last print. But if that were to go the other way, I think markets would react quite negatively because they would see that the prospects for a rate cut are now more distant.
Let's talk a little bit about tariffs, because this is the news this morning. The idea that Biden's looking at raising tariffs, which we knew was coming, for things like EVs and solar panels. I didn't realize that medical items would be on that list, too. And I didn't realize the number that's now being floated out there. Tariffs for EVs, something like 102%, which is significant. That's
So this is a frustrating thing. People think, there's still a lot of people that think Rona was the only thing that caused inflation. And I'm just here to tell people, it's delusional to think Rona was the only thing that caused inflation. This all started, in my opinion, it all started back with the tariffs. And when you enact a tariff, let's say, for instance, it's not like, it's going to show up in all the inflation data right away. It's over a period of time. It starts to show up more and more and more, right? As months tick on, quarters tick on, years tick on, it becomes a clock. So we already had started that with the whole tariff situation. Then Rona comes along, messes up supply chains. Then you get a next big lever, right? Then you have government spend like pure insanity, right? Stimulus checks, we know it all, the PPP loans, all that stuff, okay? We don't need to go over all that. You pump massive amounts of money into the system, right? It's going to get spent out there, which is going to likely cause inflation, right? Let's say I live in Vegas. Let's say everybody in Vegas just got given $1 million today, okay? Guess what? Things are going to absolutely go crazy because everybody's going to be buying everything. A Lamborghini in Vegas is going to be selling for $10 million because everybody's going to want a Lamborghini in Vegas because they all got $1 million given to them, right? And so things boom for a little bit, cause massive inflation, then you have busts that go after that, right? And so it's very important you understand, this was multi-layers of how we got to this place. You didn't get CPI to go to 9% plus just by one thing. It was multiple things, and then the continued spending, right? And then the Fed acting slow. There's literally probably 5 or 6 reasons we got to that insane level of CPI. And by the way, if we measure things the way we used to measure them back in the 80s, right, and in the 70s, those CPI numbers would have been 15-20%. 15-20%, not 9%. They changed the methodology, obviously, many decades ago. I think it was 1983, if I recall, and that changed everything forever. But 9% is really like 15, 20%. That's why most people are like, dude, I'm paying like 15, 20, 30% more than I was paying a year ago. That's what people were saying in 2022, 2023, right? That was a reality. The government said 9%. So it was a multitude of reasons on how we got to this big inflationary problem. If you want to do more tariffs, okay, that might help out some things, but it's also an inflationary thing. You can't deny the fact that tariffs are inflationary.
Bold increase from where we stand right now at 25%. That has to be symbolic to some extent, because even at 25%, you're not getting a lot of these cars into the market.
Well, I think what Biden is doing here, assuming that this rolls out as we expect, is trying to protect U.S. manufacturing, which he's obviously focused on reviving, and trying to protect the supply chain, especially as it relates to clean energy products. And also, China is falling back on an old, I would say, tired strategy, which is to heavily subsidize manufacturing, expand manufacturing production way beyond possible Chinese domestic consumption, and flood the United States and flood Europe with heavily subsidized exports. And when it comes to clean energy, where we need our own production, for example, solar panels, I think that's what Biden's trying to push back on.
And the reaction, you think, will be what? From the American manufacturers, from the markets?
Just give us the target.
Well, there's an ideological debate about tariffs. For example, Donald Trump wants to impose a 10% tariff on all imported goods. That's one of his cardinal approaches. And Trump was a tariff guy during his first term.
Yeah, he was.
So there's a big debate about, how helpful are tariffs really, because at the margin, they're inflationary. But we're in an era where we're trying to rebuild American manufacturing. And we're trying, for example, with semiconductors, to avoid the obvious Taiwan risk of being totally dependent on TSMC for advanced semiconductors. And you have to have steps like this if you really want to do that.
Roger, the first hot inflation number that we got in January or February, it was like an outlier, seasonal inventories, blah, blah, blah. Then we got another, Were you surprised by what we saw? Or have you had this sort of, dovish view on inflation all along? And has your view been shaken? I'm just wondering, I'd like to believe you that we're going to see, cooler numbers for inflation, but that means that we've had like a series of outliers. And when does that become, when do you say, I was wrong, and maybe inflation is headed back to 4%?
Well, first of all, I'm not certain, Joe. I mean, I could certainly be wrong.
Right, you said if we get a high number on,
I could certainly be wrong. Yeah. But let's step back a minute. This inflation was caused, at least in my view, entirely by the pandemic. I think there's a lot of evidence on that. And so it's taking a lot.
That's open to discussion.
Okay, that wraps up this video, folks. I don't want to go any further before I lose my cool. Appreciate y'all joining me as always. Thanks so much for being here. Brand new workshop for you guys. Pin comment down there, 7 steps to 7 figures plus in stocks. That's a very informative 32-minute video. Goes very in depth on each of the stocks, some growth hacks, and how to implement these to kind of change your future. Much love and have a great day.
And given that the first principles approach is often implemented by Elon Musk, I would expect the robotaxi to have no more than 2 seats. But eventually, I would expect some robotaxis to have 4, just not the majority of the fleet. Unless the cheaper next generation vehicle is going to be made on the exact same platform as the robotaxi, then it does make sense that the robotaxi would have a capability to have 4 seats, because a car focused on consumers, if you could just buy it for your own consumption, that car would have to have 4 seats at least. So if we see a robotaxi with 2 seats, I would assume that the next-gen vehicle is going to be built on a different platform. But if we see 4 seats, then the consumer-based next-generation vehicle, I think, is going to come out soon, and it will be just an iteration of a robotaxi instead of a brand new design. I'm generally a bit more conservative than Elon Musk, so I would have 4 seats, making it easy to have different vehicles vehicles, but with Elon Musk, I wouldn't be so sure about that. And then, of course, don't forget that Elon Musk said that the next affordable vehicles that Tesla is going to be building that will be coming out soon will be built on a platform that will sort of be in between the current and the next generation platform. So either way, we will have cheaper vehicles soon. It's just unclear to me right now if Tesla is going to use the robotaxi platform at all for vehicles later that will be produced for consumers specifically. Tesla protesters end days of action and announce further protests. This article is translated from German with Google Translate. There were many injuries and arrests. The police made 23 arrests and there are 27 injured officers. And despite that, the protesters want to continue. The local government wants to discuss Tesla's expansion on Thursday. The federal economics minister is criticizing the protests, so that's good. These protesters call themselves Turn On the Tap for Tesla. That's the name of their alliance. I think they want to take away the water from Tesla, but I don't think this argument is going to hold water. And they are making some threats. If the local council votes for an expansion that disrupts Tesla protests, will definitely come back, said a spokeswoman for the protest. The police also has not cleared the camp in the forest that activists set up in February. It is also confirmed that the protesters did not get into the inside of the factory. While 23 people were arrested, 76 criminal complaints were filed. 5 of them were brought before a judge, but all were eventually released from custody. So basically there are no consequences. Well, it's still a bit early to say, but I'm not happy to see that you can go protest, injure police officers and nothing happens to you. You can damage the property. At its peak, 1,500 police officers were deployed, and these were not just local police officers, they came from other federal states. We have no information about how many protesters were injured, though. I do like what one of the ministers from Germany is saying. The border of the protest is the border fence of the company premises. The protest ends there. The criminal liability begins if you go past that wall. These people here are letting the vehicle just drive by itself.
We can protect the
I, of course, definitely do not approve of this. If you do it on a road that's closed and you know that there's not going to be anyone on the road and you are willing to get into a crash, and it's a private road that you own or you have the rights to be on and no one else can be on that road, okay, you can attempt doing this if you're willing to get into a crash. I would definitely not do this, and certainly not on public roads, and certainly not if any other people are on the road. Occasionally, FSD still does something really dumb. It's rare for me.
Up to my
it's
wrists.
Very rare, but it does happen. So I would not do this. But they only did this for about 1 minute, and I'm pretty sure they probably tested this route like 100 times. I don't know. I would assume they did. But because it's not a private road, I would definitely not do it. And if you look on the right, you see there's a big ditch. I would not want to end up in that ditch. That seems dangerous. So definitely don't do this. It's good to see that it works, but don't do this. Don't even try. And if you look at the steering wheel, you will see that they are clearly using a cheat device to defeat the nag. If you are a Tesla investor, one reason why you definitely don't want to use anything like that or post a video like that is because no one needs to see a video like this and say, oh, we need to be a lot stricter with Tesla. That would be terrible for Tesla. So if you want Tesla to do well, don't do this. And if you do it, don't post about it. Check this out. Tesla has reportedly begun hiring back some of its supercharging team, according to Bloomberg. Chief among the personnel who have returned is Max Bezeger, the director of charging for North America. I think Elon Musk has implemented the 10% rule here. If you didn't hire at least 10% of the people you fire, if you didn't fire enough people, Tesla might hire more than 10% back. Yep, one more thing that Elon Musk is doing that exact same thing. Oh, well, this is disgusting. Vandals are attacking superchargers. They just cut the cord like this, making the superchargers useless. And they might be making a profit doing so, huh? It's specifically in the Bay Area. The cables that Tesla uses in its superchargers are full of copper, which can be pulled and scrapped for money, which is likely the most plausible explanation for this type of vandalism. How much money can you make from Another identical incident occurred last week in Houston, Texas, too. It also happened in Minneapolis. While Tesla does have thousands of superchargers, so this only happened 3 times. It's not common, but it is a bit of a problem. Find these people and get them arrested. I don't quite understand it. For 2 pounds of copper, you will only get $5? How does that make sense? I must be missing something here because these people, if they just scrap it, they're not making any money. Someone, however, says I make $500 a day recycling copper. Why? This does not seem easy. I'm not sure. I must be missing something. Maybe leave a comment if you know how these people are making money from this. That $500 a day from these copper wires is from months and months of collecting. Yeah, okay, so you did it for months and months, and then in one day you get paid $500. Maybe these thieves think, oh, I'm about to make so much money. Let's get these cables. They get them, and then they're like, okay, here's $50 for you. Ross Gerber is getting some pushback. He says, it seems that Cybertruck sales are really just taking away from Model S and X sales. It doesn't seem to be great in new Tesla owners, seeing a lot of Cybertrucks in Santa Monica and the Malibu area. Just think about this. Who are the people that they're the first to place an order for the Cybertruck? I mean, the people that place the order within like the first few minutes. Who are they? Are they the people that have never owned a Tesla vehicle and have no idea what kind of quality and what kind of experience Tesla can deliver? Or are these people the people that own Teslas and are so happy about every single one of them that the moment a new vehicle is announced, if it seems good, they don't even need to see it, they don't need to sit in it, they don't even need to try it, they are going to just buy it. You still cannot just go into a Tesla showroom and just get a Cybertruck the next day. You can't even get it the next month. You need to be on the wait list. And if you already have a Tesla, the chances are, if you're buying a Cybertruck, you're not going to be buying another Tesla on top of this new vehicle. So on the very surface, this is sort of not completely wrong, but when you take the context into consideration, you know why this is completely irrelevant. I personally have never bought a vehicle without driving it first. I have never driven the Cybertruck yet. And I suspect many people feel the same. They don't want to buy something if they haven't been able to drive it. You know, sometimes when I see takes that make no sense, I think to myself, could I start a fund and manage other people's money? I think I would probably do a better job than the absolute majority of active fund managers. What I would do is you couldn't have a fund with just one stock, so obviously you need to have many. I would just basically take S&P 500. I wouldn't call it S&P 500. I would just put most companies from there into the fund. Maybe instead of 500, I would pick 550 biggest companies in the US. None of these active managers beat S&P 500. 60% of all active large cap US equity funds lag the S&P 500 in 2023. And when you extend that time frame from 1 year to 10 and beyond, you will actually be closer to 99% of these fund managers failing to beat S&P 500, and on top of their incredibly jaw-dropping performance, they are going to charge you big fees. Well, in the meantime, you can buy an S&P 500 ETF pretty much for nothing. Eventually, a long time from now, then it is time for me to diversify my stock portfolio just from Tesla stock into other stocks. This is what I'm going to do. I'm going to buy S&P 500. I might add a few other things, but S&P 500 would be my main thing. This is what Warren Buffett also says, by the way, 90% S&P 500 and then 10% short-term bonds, I think. There's a bit more news coming out from China about Tesla's FSD. Basically, things are looking more positive. Here's someone trying FSD for 3 days, and 99.9% of his driving is handled by FSD. His conclusion is, it does not make random mistakes as often as he thought it would. Most problems he observed are pretty predictable and fixable. My main issue right now is lane selection. For example, if I have 6 lanes and I need to be in a very specific lane, occasionally, and by occasionally I mean maybe 20 to 30 or 40% of the time, it does not get the lane selection perfectly right. If it's a relatively simple road, let's say just 2 lanes or even 3 lanes, usually it gets the simple ones right, but the moment it's a bit more complicated, it starts to, even if it eventually gets it right, it does this thing. It doesn't select it immediately from the get-go. It sort of is deciding between two lanes, and it's doing this fishy thing. But I think that can easily be fixed with more data. Ray has been driving on the latest FSD version, and from his experience, FSD seems to have tamed rapid acceleration at red light stops and hard braking. It does feel smoother for him. My experience